I am the president of an organization called the International Well Building Institute, and we are leading a movement to transform buildings and communities to help people thrive. So if you're familiar with the building certification BREEAM or LEED or any of those counterparts, we offer something similar, but whereas those organizations look primarily at planetary health, we look at an intersecting zone of human health. So those organizations look at water efficiency, we look at water quality, we intersect around themes like daylight, but whereas the Green Building Movement approaches that from the perspective of efficiency, we begin from the perspective of human health and its ability to do things like improve focus and regulate sleep cycles. And then we also look at a number of other themes within the rating system, within the certification, that includes nourishment, fitness, and mental health and well-being. So Europe is one of our leading markets across the world. We've got more than 1,500 buildings who are working their way through the program that accounts for more than 300 million square feet. But by the end of this year, we're targeting 1 billion.
Great, Jarek.
So Grosvenor is a private real estate investment company. We're probably one of the biggest private companies out there, and quite certainly one of the oldest one, with something like over 300 years of history. We're probably best known for our London holdings, but we actually invest across the globe. So we have our business in the continental Europe, but also in Americas, in Asia. And I'm within this organization, I'm responsible for research and strategy analytics for Europe.
Great.
Luke Dawson with Colliers, covering Central and Eastern Europe. So I'm responsible for the investment teams as well as overall management for our business there. Colliers, apart from renting boats at MIPIM, we also do commercial agency around the world. We're one of the top commercial advisors anywhere that you could find commercial real estate. So within Central Europe, we've got offices in every location where we have 7 offices in Poland right now. And then multiple offices through Czech Republic, Hungary, Bulgaria, Romania, Slovakia.
Great, Neil.
So I'm Managing Director of Capital Markets in Spain. I've been in Spain for 18 years, so I've seen various cycles. In Spain we have an operation of about 23 million euros of gross turnover, and we're 110 people over Madrid and Barcelona, and we cover the whole of Spain.
I'm David Kaiser, I head up the UK and Ireland real estate team for WeWork. I previously ran transactions for WeWork across EMEA, so I've worked in a number of the markets mentioned today. So WeWork, we probably know us for our real estate, but we see ourselves as a community platform. So the idea is that real estate is a gateway to a community which encourages people to get to know each other and build relationships and work. So very similar to what you were saying, we're very interested in our member well-being, member growth. And so we offer lots of services and design very, very considerately to encourage the community. I'll talk about that in more detail later.
Okay, great. And David, maybe just starting with you, we saw there from Damien's presentation about the GDP growth, some of the economic fundamentals. Mm-hmm. How much is that a deciding factor in the locations that you're looking for, the cities that you're particularly looking for?
Sure. So we're really fortunate because I think unlike a lot of landlords or developers, our members, what other landlords call their tenants, are in our buildings, and we're very vertically integrated. So we have sales teams in London, Warsaw, Miami, wherever a large member is, we are sitting with them, talking to them every day. And so they'll say, we see Birmingham, or we see Warsaw, or we see Dublin as a market where we need to be because there's a project there, or because we think there's excellent people there, or because it's so well connected, whatever the reason. So we're a little bit ahead of the curve, because we speak to not only the CEO, the CFO, the head of real estate, but also then we are in our building with our members, because we operate them, unlike a lot of landlords. So we get feedback directly from the people on the ground who also tell us what they want in their buildings, what they need. So we're quite driven by our members. At the same time, what we've actually done in-house is we've spent, about 5-6 years ago, we hired about 200 developers to develop a lot of in-house systems, and so we collect data religiously. If data is the new oil, I think probably no one in real estate collects more data than we do, and as part of that we've developed a lot of mapping tools. So if we're looking at a new market, we can see the sort of workforce that's there in terms of the age, the demographic, what competitors are there, what coffee shops are there, what gyms are there, etc., etc. So we can really accurately map a city now, and of course, it's more powerful somewhere like New York or London, which throws off so much data, or in markets already in. But it's a great way for us to go to new markets. It takes the human element out of it and adds more science. So we can very accurately predict what markets can be successful. I think that's been shown in our track record, where occupancy is extremely high across the world, and the new markets we've gone to recently. I mean, Warsaw is a recent city I worked on, and I go to a brand. First time in Europe, our first building opened up 80% full, which is very, very successful, and is now full and new coming down the pipeline. So it just justifies the strategy and the focus on data.
Okay, good. And Jarek, from an investor's point of view, when you're looking at these macro data and you're following what WeWork are doing, or what other providers in the business are doing, how much are you following that? And has that led to any kind of adjustment in your investment strategy in terms of how you look at the locations and the cities that you're investing in?
Yeah, I think we do look at investment locations quite differently than we used to do 5 or 10 years ago. It's one part is the data, as David said, but it's also how cities work in this connected world. I think it's hard to point it really, put it down to one factor. But I think generally the economic trends matter slightly less when it comes to location, which becomes much more on the relevant on the micro level than the macro level. And I think country economies certainly matter. I'm not saying they don't, but there's other factors beneath it. And I think a lot of investors start investing not in a country but in a city, and actually not even in a city but in a certain neighborhood of a city, and then it becomes very, very micro, where probably the big GDP trends start mattering less. I mean, it's just simply if you're a startup, and a lot of these companies today started small, you pick your location not by by the GDP trends of a country. That's not necessarily the driving factor. So the locations, the starting points for these businesses are driven by things like livability, life quality, health factors, on top of the economic factors. So I think in this sense we need to look much more broadly, not just follow the GDP.
Okay, good. I'm going to come to you in a second, Rachel, but Luke and Neil, is that something that you're seeing more, that these kind of livability factors are more becoming a driver, I suppose, for investment decisions?
Yeah, I can go first. I would say within Central Europe, absolutely. I mean, I think what we've seen is there's always been this classical definition of core office product, core plus, super core, etc., and that was always defined by what's in the pinpoint of the city center or the business district. And what we're seeing really is that definition is shifting for some investors, where they're actually saying, look, is this a place that the employees want to go, rather than saying, is it a place where everybody already is? And that's been a large part of the shift. It hasn't gotten there yet, but we are seeing that investors are willing to take, I would say, more aggressive pricing when they're looking at an investment based off of the future. So they've maybe got a 5 or 10 year outlook of, is this area going to become the next hotspot? Whereas previously they would have played it safe and said, okay, I can buy in the city center. So we're seeing that shift a lot. And I think as the labor markets have tightened up across Europe, it's not just Central Europe, this becomes a bigger and bigger story of how do I attract employees to where I want them to work? And then that's going to start becoming, I think, even more reflected from the investment perspective of people that are actually putting in money over the long term, whether it's 5, 10, 15 years. So I think that trend probably is applicable in the rest of Europe, but we're seeing a lot of it in Central Europe right now.
And what's the situation in Spain now?
I'd like to open up the kind of debate as well to residential, because what Luke was saying in terms of historically 10 years ago we saw very much the investment market was dominated by offices, retail and industrial logistics. Residential now, particularly in Spain, is a huge sector. The amount of investors we're seeing, the amount of potential capital we're seeing, the amount of opportunities we're seeing is absolutely incredible. And these livable cities, these indicators that we're seeing that a lot in the residential sector. I think an example is Colonial's new development on Méndez Álvaro, which is very exciting, because there's going to be co-working, there's going to be co-living. Hopefully I've not said anything wrong. But I think
he's on his way to invest.
So I think definitely. I think certainly Spain is a huge growth story. I think there's been a huge amount of activity, and I think this, in terms of indicators and what you were mentioning before, I think in terms of the residential sector, this is extremely important. And we're not just seeing it in the city centre; we're seeing it in pinpoints around the cities in Madrid and Barcelona. And I have to remember as well, Madrid has been a huge focus of regeneration, a number of mixed-use projects, extremely emblematic, which I think are comparable on a European and global level. And also Madrid has a 30-year plan of the extension of the whole northern area, which is going to refocus part of the office sector and certainly a huge residential component as well.
Okay, good. And Rachel, I think you said that the institute started in 2014. How much of a change have you seen in terms of the attitude of the markets and the attitudes of investors to what you're doing, and how influential those areas like wellness, like livability are?
I think it's been a pretty dramatic shift, and I think we've taken our cues and the momentum from the green building movement, but at some point we realized that green buildings were buildings that also were having an impact on human health and performance. For a business's bottom line, for an investor, that's 90% of your annual operating costs as opposed to 10%. So it's a financially driven decision, but it's also a generationally driven decision. And by that I mean that millennials are really the ones who are driving transformation in the workforce, whereas baby boomers driving decisions in residential. So, Silicon Valley and the tech industry started this this trend of offering amenities in the workspace, because the millennial expects a job that will not only make them great money, have great benefits, by the way, more money than their parents is what they think, and also offer them sleep pods and climbing walls and massage chairs and things like that. But what's happened is that now that's changed the expectation of the millennial for the modern workplace. They expect more. So it's not just Silicon Valley and tech startups anymore. Every organization, law firms are having to start to offer many of these amenities, many of these opportunities, more livable, walkable locations and things like that in order to attract the best talent. So I was talking to a multinational real estate developer the other day who said, we've shifted our perspective. When we now build a building and we're filling it with tenants, we think of ourselves as partners to that tenant to attract and recruit the best talent. And then likewise, baby boomers driving much of the residential trend right now, and that drive toward walkability, toward livability, toward improved wellness amenities, in part because they're starting to move back into cities, empty nesters, but also because they are looking down the line at their own trajectory. They're starting to place their parents into late life care, into senior living facilities, and they think, there's no way that I will live in that place. The vast majority of them want to age in place but don't have the ability to do so in their current homes. So it's driving this enormous shift in terms of what the expectation is for real estate across the board.
Okay, good. And we're going to be covering, for the first time actually at MIPIM, we'll do a session on senior housing and healthcare actually. And it's been interesting to see over the past year how much a lot of those alternatives have really come to the fore, and also that more institutional investors are beginning to move into that space where previously they hadn't really been looking. David, just coming to you, do you think you've started a bit of a trend there in terms of how you're, I suppose, transforming the expectations or meeting the expectations of your members? Do you think that's a trend that's going to be across all of these sectors? That it's going to feed into retail? I mean, Damien was showing there different types of experience and the expectation. Do you think what you're doing is feeding across all of these sectors?
Sure, there's a lot in there. So I don't know if we started it, I wouldn't claim full credit, but we've definitely, I think, been responsible for the big drive. I think it's really interesting what you're just saying, and we've now, our membership base is over 30% of them are enterprise members, enterprise being someone with 1,000 employees plus, and it's 35% in London, over 60% in Dublin. So I think a lot of the tech companies, where they're offering what we've done at WeWork is, you're right, millennials now, I think the hardest thing for a company that we're told is attracting and retaining employees. Someone touched on that before. And when I graduated 10 years ago, I wanted to earn the most money. So I went into law, but I could have gone into consulting or banking or real estate, and it was that simple a decision. But now with tech giants, and the barrier to entry for being the next Mark Zuckerberg or next Adam Newman is so low, because office space is so cheap, and setting up a website costs 500 quid, and all of your friends are doing it, and so you can collaborate, and it's a real opportunity. So I think for the corporates, they really have to offer something more, and a big part of that is office space and a part of a community. I think in terms of sort of going back to your question, I think it's already happening. I mean, retail, I find really interesting. Obviously, we deal with a lot of big landlord developers who have also retail developers, and I think with retail, they didn't listen to the end user, which I think office landlord developers are doing now. They didn't adjust, they didn't offer experiential centres, and now they are, and you're seeing it more and more and more. And you go to, I don't know any names, but there are some amazing developers, particularly in London, across the UK and Europe, that are really being proactive and innovative and creating place destinations where you want to go. And I think that goes way beyond just putting really cool restaurants in there. That's like the most simple and ineffective way to do it. It's much more than that. It's drawing crowds in and having proper mixed-use schemes that are joined up and add value to experience and drive footfall. So yes, absolutely in retail, and I think what you're seeing is workspace going more and more blended. So, for example, we have acquired a coding school called Flatiron, which we're putting into our buildings, because our members told us that one of the biggest challenges that they have for their employees is that with AI coming down, all the tech, their employees need to be upskilled. And if they can do that in a building that they're in at lunchtime, or if an employee can upskill during their lunchtime and find another job, that's very, very powerful. Putting nurseries, so we have WeGrow, putting gyms, Rise by We, and then also just within the workspace itself being much more innovative and having much more flexible workspace. So it's not just about sitting in your office, it's about being able to work very, very flexibly across a whole building or across a whole estate. And I think residential has a lot of really innovative developers as well with co-living. We've got We Live in the US that is a very, very similar concept to WeWork in terms of sort of trying to put community into residential. So yes, I don't know about elderly care homes, that's not my area, but it's the way society is going. Millennial driven, but I think baby boomers have jumped on the bandwagon. I mean, in our sense, over 50% of our members are over 30. It's completely revolutionised how the experience people want at work.
Okay, and probably I'm closer to the senior care and housing than anybody here, so that's good. Luke, obviously the cities that you're looking at, particularly in CE, how important are things like infrastructure? You've also got within Poland, let's say, you've got a number of smaller cities. Can they, by either being tech hubs or by focusing on a particular area, can they actually make themselves an emerging hotspot, or is it really just the capital cities?
I think in our region in Poland is probably the best example. A lot of what's happened is being focused on BPO SSE, so business process outsourcing, shared service centers. And what we've seen is traditionally, if you go back 10 years, people thought of these as call centers. And that's completely shifted. So what we're seeing now is that within Central Europe, and this is applicable in other places in Europe like Portugal and other places where they have cheaper costs of labor, is that you're getting higher value employees coming in. So cities such as Gdansk, Gdynia, Poznan, Krakow, the bulk of those markets is driven by this BPO SSE sector. And what's been interesting is the shift has been, originally it was Polish workers because there was a good history of engineering, technology, etc. Now what we're seeing is people coming from Spain, coming from Portugal, even coming from Greece and Germany, and moving to Poland because the quality of life is better. So they can go to a place in Poland and they can have a big house and they can work only 9 to 5. They don't have to work 12 hours a day, and they can work in brand new nice office space. And this is, I think, what's driven, again, it's almost this people are going after gratification and satisfaction for themselves, which is the way that it should be, but they're realizing that there's other options. You don't have to be in a capital city. You can go and have a career in a place like Gdynia, where most people wouldn't have even known where it is growing up, but now they're willing to take an IT job there as a programmer for a Nordic bank. And we're seeing this type of shift, and the cities are reacting to that in the sense that they're putting in new universities, they're putting in major infrastructure and airports to accommodate it. And if you make life easy for people, people will go. It doesn't matter whether you're there or wherever. Everybody can get on Skype and fly home and do whatever they need to do to keep their connections. But the quality of life is what's driving a lot of people's decisions.
Okay, good. And because you've come all the way from Washington, what's the situation in the US, and how do you see that, if you're doing that analysis, how does that compare to Europe in terms of uptake, I suppose, and investor engagement?
I came from New York, so please
Sorry,
please don't judge me.
You phoned me with a Washington number there, didn't you?
I did, yeah. Previously, prior to the last election. I think we see a lot of similar trends in the U.S., and I think, global is the new local. So, so many of these companies are the same, so many of the investor-driven decisions are quite similar. I think we see some leading and some lagging, but I would say that I see more similarities in Europe and the U.S. than I see differences. Where I see differences are in Asia. I just came back from China. They are becoming the drivers of modern workplaces, of modern retail. I visited a number of developments under site where, as you were talking about in terms of retail really shifting, there's outdoor running tracks and green roofs, and on shopping malls. There was a big story where, if our certification is like a vitamin here or in the US, it's like an aspirin in China, because air quality is the new luxury good. So there's a big story in Beijing where a number of mothers went into all the different shopping malls with air quality sensors. And they found the mall with the superior air quality, and that blew up all over social media. All of a sudden that mall is filled with mothers and their young children shopping. So I think what we're seeing is that a lot of the innovation is actually coming for the first time from outside of Europe and in the US. I didn't walk into a single office during my 2 weeks in China without finding an air quality sensor inside of it. And companies there are doing everything they can to keep people inside and keep people working and make them as productive as possible. But the technology there is moving faster, and the trends are moving faster as well. So I think in many ways it feels like for the first time in my nearly 15 years in working in real estate that we're more lagging than we are leading. And I think that there are some fascinating things that are happening over in Asia across the board, across every single real estate sector, that are worth paying attention to, and technology that will blow your mind. So my parent company has an integrated home and commercial system. So it will coordinate your ventilation with your daylight sensors, with your shading, with your HVAC system, and so forth. And in China, I saw those systems at a whole nother level. Fully integrated smart homes, fully integrated smart offices, and the data that they're using to drive that is of a tremendous sophistication. So I don't see huge differences in between Europe and the US, both in terms of design, in terms of operations, and in terms of investor motivations. But I do see that in places like India and China, their expectations are shifting, and that in turn is shifting the global expectation as well.
Okay, good, thank you. Let's just because I know we're tight for time, and I want to make sure that you're in time for your next sessions. Let's just pick out some cities that we think are the emerging hotspots. So ones that either you're particularly looking at because you think there's an opportunity, David, or ones that particularly in your regions you think are interesting, or you can pick the globe, Jarek, however you, you want to look at it. Let's start with you, Jarek. Where do you pick out some cities that you're looking at and that you think are interesting for people here?
So I think you can look at it on different levels. So one level is the city. That would be the traditional sort of ranking, which are the top ranking. We've been active in Liverpool for a while, and I think that city doubled population in the last 10 years or something like that, off the top of my head. So that is probably a good sign. For those in the UK, you would probably have a comparison of Liverpool 10 years ago now, and it's a different city. That's something happening outside of the main hub, which is London. You do have these hubs that are just picking up very very quickly. Another level is neighbourhoods, and I think we've been through this in previous panels as well. I'm a strong advocate of looking at cities in terms of neighborhoods. I think really city, especially a big city, is rarely a city. It's a bunch of neighborhoods really. And if you look at, in this sense, at Paris, so we're looking at investment strategies in Paris. you do see areas that you wouldn't even think of going to several years ago being really popular, not just as residential areas, because they're very lively, they're international, they're really, sort of cool places you want to be, but they're starting to become interesting as office location, and not just for these young startups, they're starting to become interesting for corporate offices, like the 10th, 11th arrondissement, so sort of northeast Paris. So I think in this sense, these would be my two examples for hubs that are really picking up as new locations, and it's not necessarily a completely new city. No one would know where it is. That picks up. It's sort of the second league, I would say, that's becoming interesting, and then specific neighborhoods in the established cities. And you see, if you look at the investment trends, I had a look at RCA's numbers the other day. You do see how ranking changes, how these second league cities do improve. And then where investments go, that's increasingly outside of CBDs for offices.
Okay. Luke, any particular picks?
Sure. Within my region, I would say that the most interesting market, if you're looking long term in the growth story, would probably be Bucharest, and a lot of reasons why, but you've got incredibly high GDP growth, almost zero unemployment, a massive IT kind of infrastructure and focus, lots of universities, and we're seeing that it's probably been underinvested the last few years, and finally this is kind of the tipping point where some people are actually coming on to Bucharest and are realizing that there's a lot of value here. So we kind of look at it as if you look at Romania as a whole, it's almost like Poland 10 years ago in terms of the makeup geographically, the way the infrastructure is currently set up, and if you've got a long view, that's probably an interesting place to look.
Okay, good. Neil?
Several cities, but I think we shouldn't overlook Madrid as a real hotspot for several reasons. I think in the hotel sector and in the retail sector, particularly high street retail, Madrid has been well below the comparable other European cities such as perhaps Berlin and Milan. So I think there's a strong growth story there. I think the amount of inward investment and regeneration projects in Madrid show that as well. I really think Madrid has got a tremendous growth story. And port cities, I'm a great believer in Bilbao, which historically the north of Spain had as lower unemployment, is more stable and so on, is good performance socioeconomically. I think Bilbao for its stability. I think there's growth stories in certain sectors in Bilbao. I think more dynamic and more exciting are Valencia and Malaga. I think if we look at the infrastructure and the change in Malaga in terms of the city centre and the redevelopment of Malaga, I think it's dramatic.
Okay, good, interesting. David, where are the ones that you, if you can say, where are the ones that you're looking at the moment where you think there's potential for WeWork to grow into that particular market?
So this is what I can say. I'd say that, but UK and Ireland focus, because that's the day job. But I think what a lot of local authorities or city councils have done in the UK has been very, very proactive and intelligent and joined up. And there's a lot of cities I could name, but I think the easiest one is probably Manchester, because I know that well, because we have 2 open buildings, soon to be 3, which we went to a couple of years ago now, again because our enterprise members drove us there. We were always very, very London centric, and it's just an absolutely phenomenal city in terms of the local authority is being so smart in how they've encouraged growth, from continuously investing in the transport system with the airport and the Met system, which they keep iterating and adding new lines to the universities that are so excellent there, to pedestrianising huge areas. They've got a cycling czar, which I think is going to really pay dividends soon as well. So just as a local authority, I think they're absolutely brilliant, and you can see the dividends of that. I think they were maybe in front of some of the other regional cities. And for us, I mean, we've got 2 centres, one in Spinningfields, one in St Peter's Square, one coming on John Dalton Street, opening a couple of months, which is I think nearly pre-sold full already. The occupier market up there is pretty crazy. I mean, from corporate and also SME growth companies, because it is it's a great city to do business in because of the range of corporate occupiers and the smaller guys, and the fact that it's so easy to connect to. And it's just becoming, I think, like a self-fulfilling prophecy now, and it's attracting more and more people. So we love Manchester. That's not a sort of the world's worst kept secret, really. I mean, but we can see why there's been so much investment in there.
Okay, good. And last but not least, biggest trend. What do we think for people who are here to take away with them? What do you think the biggest trend will be for cities? Just one each, because we're short on time. You can start, David.
Thank you. I really think taking what were private areas and making them public. So I'm in Devonshire Square, and we are rolling into 600,000 square feet there, and that was built as a private estate for middle-class office workers, and it's actually really hard to get into because of all the narrow entrances. We've taken it back, we're opening up the entrances, we're making the square public with artwork and music shows and waffle stands, and it's so much more powerful in the community. I think I think a lot of developers are getting on board with that now, and a lot of local authorities massively believe in it, so I think that trend will continue, taking private space public.
Okay, great.
I'm going to do two because I speak less.
Okay.
So I think the revolution of the office sector for the modern occupier, and I think the built to rent sector in residential.
Mm-hmm. Great, Luke.
Bit of a different one. I'd say mobility. So obviously you have your Ubers, etc., and your Metro, but I also think just even in terms of having scooters and bike paths and all these things are now starting to become more and more important. I think that's going to continue.
Jarek?
I think cities need to look what people actually want. So just adjusting to the needs of the population, not just what part of it is providing, all these amenities that make life easier and healthier. But the other thing is, a lot of structural changes that you need to make this actually happen. It's things like right apartments for the right people to have. I think in central Madrid, a lot of apartments are really big, while what people are looking in the center is more of a smaller unit type. Then you have things like right locations for working, well connected, where you can walk from home to work. To make this happen, you need a lot of things happening at the same time. It's transport, it's structure of the city. So I think just from the city perspective, thinking of what people are actually looking for and adjusting to the needs, that will be key to success.
I think true mixed-use developments and integrated communities focus on quality of life above all things.
Okay, that's great.